Hey guys, how's it going? It's Andy from Goonfest and happy Monday. Hopefully you guys all had a fantastic weekend. I had a very nice, relaxing Saturday. I went and finally got a haircut, shaved my mustache, so now I don't have to get a lot of the loving comments that you guys have been having about my mustache. I'll put up some of my favorites right now, and then probably my favorite of all time, I'll throw that up on the screen right now. So I'm a little bit more put together. In today's video, I'm going to be talking about some of your favorite stocks that you guys are looking to buy going into 2021. I've been asking for suggestions for stocks to talk about in future videos, so if there is a stock that you guys would like me to talk about, be sure to leave it in the comment section down below because all of the stocks from today's video were requested by you guys. Before getting into the 4 tech stocks that people are looking to buy, I wanted to talk about some of the stock market news that's happening this week, and one of the biggest ones has to do with Airbnb, which is expected to IPO on Thursday. And so IPOs, I wanted to talk about it quickly. The company announced that they're going to be targeting an IPO price of $56 to $60 compared to the expected $44 to $50. This would give the company a valuation of $42 billion when it goes public on the 10th, which is Thursday. Airbnb will trade under the ticker ABNB and will be one of the largest IPOs of 2020. But I wanted to remind people how I felt about buying IPOs. IPOs are mainly hype driven. It's not a lot of analysis on the actual company. It's basically a stock goes IPO, people have some opinions on the overall company, and you have to kind of feel out what the actual fair value for the company is going to be. And so it's very common to see moves in the first couple of days of like 15, 20% because there's not a lot of knowledge on how the company should be valued. And so you see a lot of major moves. And so I've always stayed away from IPOs specifically for that reason, and because the main way that I trade stocks has to do with technical analysis, which follows price action. And since you don't have any history for how the price has moved in the past, I don't have any way to determine if I should buy into the stock. Also, I never buy into IPOs until the lockup period ends because as people become millionaires as a result of being a part of these companies, a lot of them want to sell off their shares to actually lock in their profit. So until that happens, I think it's too risky. But let me know if you're going to be considering buying into Airbnb when it IPOs on Thursday. But before getting started, I do have to say that I'm not a licensed financial advisor and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, I really appreciate it if you hit the like and subscribe button, as it would help my channel out a lot. We're getting very close to 7,000 subscribers, so thank you all for that. Okay, so the first requested stock that I want to talk about today is going to be Advanced Micro Devices, ticker symbol AMD. So AMD is currently trading for $94 and it's up 104% on the year. So I did get a little bit of slack for the past couple of videos where I've been talking about cheap stocks to buy going into 2021 because I have talked about Intel, ticker symbol INTC, as being a decent opportunity in my opinion. And everyone's always like, why aren't you talking about AMD? AMD is such a better company. The difference between AMD and Intel has to do with how they've moved in 2020 so far. Intel is down like 30% on the year and AMD has doubled so far this year. So I wanted to talk about AMD and give my overall opinions on it. Part of the reason that AMD has done so well this year has to do with some of the problems that we've seen with Intel. And so it's one of those things where anytime one of the companies does well, it usually means that the other one's not doing as well and the market share is being taken from it. So currently Intel is the largest producer of semiconductors in the world, but for the past couple years, AMD has been slowly taking more and more of that market share. So let's talk about the last earnings report where AMD came out with some incredible numbers. The revenue jumped 56% year over year, and their net income skyrocketed by almost 150%. The company released their new AMD Ryzen 5000 series processors that led to a very nice beat in their revenue. The company also announced that they would be acquiring the company. I'm not even going to try to pronounce it because I've tried it like 4 times and I'm not super confident, but it is ticker symbol XLNX for $35 billion in an all-stock transaction. The move is expected to improve AMD's margins, earnings, and free cash flow going forward. So anytime you see that, usually seems like a pretty good acquisition. So as I mentioned, part of the reason AMD's had an incredible 2020 comes as a result of Intel having a really tough time. Back in July, Intel announced delays on their 7nm chips that gave a huge boost to AMD as the market expects the company to continue to take market share from the giant. In addition to the earnings reports that they've been having recently that have just been incredible beats over and over, it just has resulted in AMD skyrocketing in price in the past couple years, and Intel has just kind of been stuck and has been sliding recently. In the past 5 years, the company has done incredibly well, and when I put up that 5-year chart, you can see how crazy of a run the stock has had. This is one of these stocks that I remember looking at when I first got into investing in the stock market. I remember AMD trading at like $17, and I remember it shot up to $30, and I thought that was incredible. And now at this point, it's getting close to $100. So this is a stock that has exploded in value in the past couple years. It's one of these stocks that a lot of the young people, it's been especially popular on Robinhood and Wall Street Bets. and has mainly to do with the fact that it has had an incredible boost in the past couple years. And while the company has skyrocketed in price, the revenue chart shows the constant need for innovation, as we've been seeing this kind of ebb and flow of the different products as they go through their life cycles. You have a very nice spike when it comes out, then it rides away for a little bit and then falls, and then you have innovation, and then it continues over and over again. It's not something like an Adobe that their revenue has just skyrocketed pretty consistently over time. AMD has definitely done very well recently, but it does kind of go through life cycles of their products. And based off of that, since 2015, AMD has been investing in themselves heavily with research and development, where they spent $950 million in 2015, and now that is up to $1.5 billion in 2019. One of my favorite parts of the company is that they've increased their margin pretty constantly over the past couple years. Margin, for those that don't know, is how efficient a company is at turning revenue into actual profit. That's one of the main things that I look at for stuff like airlines, that the margins, considering how much money that they are bringing in revenue, has such an impact on how much money that they're going to bring in as profit. AMD has just been steadily increasing that, and as I mentioned earlier, that acquisition from this year is expected to increase that margin even more. Something to watch is that AMD is one of the most shorted stocks on the stock market, and the levels that we're seeing for these shorts is a record high that we haven't seen since 2017. And at this point, it has increased by 125% in the past month. So there are a lot of people betting that since AMD has had an incredible run in 2020, eventually they're going to have to sell off. But based off of the CEO's comments about the outlook for 2021 that was very positive, it'll be very interesting to see if the short sellers are going to be right on this one, or if they're going to be burned like the Tesla ones that we recently saw a news report saying that the Tesla short sellers have lost more in 2020 than the US airline industry, which is always really interesting to compare, because you think of the airline industry as just getting crushed, and then you look at Tesla's share price and being on the opposite side of that has some very tough effects. So let's hop on over the charts and I'll talk about what I see with Advanced Micro Devices, ticker symbol AMD.
Okay, so here we are starting out on the charts looking at AMD, or Advanced Micro Devices. And as you can see, it's had an incredible run for the past couple years. This goes all the way back to, May of 2016. And it went from down at $4 and now it's currently up at $96. And similar to a couple stocks we're going to talk about today, it's gone horizontal for a bit in the summer months of this year. A lot of these stocks that have done very well in 2020 have kind of stagnated for a bit, as we've kind of oscillated between some good news that has pushed the market up. Then you get some vaccine news that either pushes the market up, or if you're a stay-at-home stock, pulls it down. And right now, AMD is sitting at not the strongest resistance in the world, but I definitely would call it a resistance. It is trying to break above the recent highs. As you can see, it does call this as being an all-time high. But at this point, it has spent a couple days just trying to get above this level. You get this push above, it sells off, gets sold back the next day, then bought up. Today it opened up above it, and it is sunk back down into this level. So if I'm looking at the charts right now, I'm slightly bearish just based off of where this is going right now. I don't think this is the best buying opportunity for a short-term play, but for the long-term potential of the company, I'm happy buying pretty much anywhere. But I would like to be a little bit more patient. We do have this nice support that is a result of this gap up back in July of this year. This is down at the $74 mark, so I'm going to set an alert to see if it comes down to this level, because I think if AMD ever comes back down to this level, I think this is a great opportunity. Right now, it's not a great buying opportunity just based off of it being near a short-term resistance, but if it can break through this, it spent a couple days trying to, and it has not done it so far, but if it breaks above this, I have no idea where the upside potential of the stock is, just because it's had an incredible couple years. But at this point, long-term bullish, short-term bearish, but if it does come down to the $74 mark, or even down to the 50-day moving average, I'd be happy buying in at that point.
Okay, next up, we're going to be talking about Salesforce, ticker symbol CRM. Currently, Salesforce is trading for $228, and it's up 40% on the year. And so from their website, I was just doing a little bit of research. They describe themselves as being the world's #1 customer relationship management, or CRM platform. They help with marketing, sales, commerce, and service. CRM has become the largest software market in the world, and is expected to grow to $80 billion in revenue by 2025. And so doing some research on CRM, I was kind of surprised that it is the largest software in the world. And at this point, 91% of companies that have more than 11 employees use CRM software. So that just shows how important of a software this is. And since Salesforce, since they were one of the largest, they are able to use the ticker CRM, which is kind of funny. To show the change in the time, Salesforce replaced ExxonMobil, ticker symbol XOM, on the Dow Jones back in August. And so that kind of shows a changing of the guard, as these energy companies, a lot of the oil producing companies, have been taken off some of these major indices, and software companies like CRM have been put in their place. So it's pretty interesting to see how things are changing over time. But similar to what I said with weed stocks last week, competition is one of the biggest red flags for me, and in a market that's exploding in growth with this software market, there's a lot of competition. So with the explosive growth of the CRM market, it's not surprising you have competitors, but my main problem is who the competitors are. With the weed stocks, you don't have one company that's just absolutely dominant. But when you look at the CRM market, but right now their main competitors are Oracle and Adobe, which recently partnered with Microsoft back in late October. And so whenever I talk about companies that are competing against giants, I always want to make sure that if they are going to compete against them and I expect them to succeed, I want them to have a reason that they're going to be doing so much better. When I've talked about Sonos, which goes up against some major competitors like Google, Amazon, Apple, the reason I was very bullish on them is because they have such a higher quality product than the other ones. They're not exactly fighting for the same type of market share. But when I look at this market, I don't think it's going to be something that CRM is going to be able to increase over time. Whenever you have these major companies, this is something that Amazon has done constantly. Since they're so massive, they can continue to operate with razor thin margins and kind of price out the rest of the competition. We've seen this with the weed stocks where the margin has continued to go down over time. And so CRM might be the largest in the sector right now, but some of these giants are coming in and are expected to take a lot of the market going forward. And you have newer companies like Zendesk, which is ticker symbol ZEN, HubSpot, ticker symbol HUBS, and Twilio, which is ticker symbol TWLO, are all getting involved in the sector, and there's just so much competition, and that's one of the biggest red flags for me on this company. But it has done very well in 2020, and there was some recent news that they're trying to fight off the competition by acquiring Slack, which is ticker symbol WORK, for $28 billion. This move is expected to diversify their business away from only CRM to marketing, customer service, data, visualization, and more. These two companies are expected to remain independent of each other, and it should be very interesting. I don't love Slack. I think it's very good, but I don't think it's enough to give a buy rating to something like a Salesforce. I think it's a good move. Trying to diversify is great, but the fact that your main business is being kind of hampered by some of the growth of these other major companies like Microsoft, Adobe, Oracle, does not make me feel very confident about them overall. Personally, if I was going to be buying into this CRM type of market, I would likely go with something like an Adobe, that their main business comes from their creative products, that has a 97% profit margin, and then can invest into the CRM market now that they're working with something like Microsoft. So if I was trying to get into this boom that we're expected to see with this market, I'd rather go with something like an Adobe, though I do like the acquisition of Slack, ticker symbol WORK. So let's hop on over the charts and I'll talk about what I see with these two companies because they have moved very differently in the past couple weeks as the acquisition was announced. So let's hop on over there and I'll talk about what I see with those two stocks.
Okay, so here we are looking at Salesforce, ticker symbol CRM, and the charts are pretty interesting. It was a flat stock for a while for pretty much all of 2019, and then you come into this year, falls down with a pandemic, and then it's just been on a tear, going from lows of $124 up to highs of $285. But in the past couple months, we have been seeing some very bearish trends, and so I want to talk about this gap up. Anytime you get a gap up, you want to see it hang out there for a little bit and then push up to a new high and continue to make new highs. But what we've been seeing with Salesforce is that it pushed up after the earnings, and then we had this high, and then it has sold off, got bought back up a little bit, but not to the same levels that we saw from the highs. Then it sold off, and then we saw a lower high, and then it's just kind of been flat. And then we did have this move down. If I zoom out, this drop down here for Salesforce came from the announcement that they were going to be buying Slack. And when we go look at Slack right after this, you can see that it had a very different effect on Slack. But as of right now, this is in a pretty bearish trend, just because it is sold off from its highs from the earnings report. However, I do like this for a potential dip buy. As I've mentioned, coming down to a gap fill is always a great buying opportunity because people always like to see that gap filled and see it as a decent buying opportunity. And now that we've gotten down to here, you can see that it dropped all the way down to exactly where the gap was, and it's been bought back up a little bit. And so if you're long-term bullish on this stock, I see this as a great buying opportunity just because of what the charts are telling me. There is some potential risk considering it is in a bearish trend and the trend is your friend. But right now, I think this is a pretty good opportunity compared to the market that is very overbought at this point. The track record is very solid. It was horizontal for a bit, but the long-term returns of the company have been fantastic if you look at the all-time chart. So I'm pretty bullish on the charts based off of that. Not as bullish on the company based off of what I talked about in the video, but I think it's pretty good. And then we'll go look at Slack, which is ticker symbol WORK. And Slack is a different story. It was very horizontal for a long time. And I had this charted out. As a potential high. It came up here right after the announcement that they were going to be acquired by Salesforce. And at that point, it has got up to this high, and it's just kind of been hanging around here for a little bit. And it's not a very attractive candle to look at. But we come up here, pushes up, sells off, gets bought back up, and it's been pretty horizontal for a while. So it seems like investors are just kind of waiting to see what's going to happen. From a value perspective, it's not at a great deal right now. This was a pretty solid resistance that I broke through because of the news. So based off of that, it is bullish because of that. But buying into a stock that is recently pushed up significantly from $30 or $29 up to $45 in just a couple days is not very attractive to me. But this is what happens when you have a company that gets acquired by a larger company. You usually see a lot of optimism and a lot of momentum that pushes it up. So I'm going to be very curious to see if this level is going to hold or if it's going to slide back down to I'd be watching maybe this level right here at the $34 mark. If it dropped down to this level, I would consider buying. But at this point, I don't think the charts are telling me to buy a stock like Slack at this point.
All right, let's wrap up today's video talking about Netflix, ticker symbol NFLX. Currently, Netflix is trading for $516, and it's up almost 60% on the year. The first search I did while researching Netflix was an article asking if Netflix could become another millionaire maker, which I think is really interesting because it has already been a millionaire maker. In the 2010s, Netflix was the top performing stock on the S&P 500, returning almost 4,200%, while the S&P 500 was up almost 190%. So it has done very well in the past decade, and I personally expect that growth to continue going into the next couple years. Even with a great 2020, the stock is down around 10% from its all-time highs back in July. So considering the stock is up almost 60% this year, it is considered at a discount if you look at that all-time high. Similar to Salesforce, Netflix is in an industry that has a lot of competition. You have some of the major players like Disney, Amazon, and AT&T, but Netflix is still the giant of this sector and are expected to bring in 200 million paid subscribers by the end of the year. And with their price increase of up to $14 a month, the results give a crazy revenue growth. And when I pull up this revenue chart right now, it's just absolutely beautiful. I have been very critical of Netflix in the past, mainly because I thought that they were spending too much on content that wasn't actually their own. I remember seeing an article on how much money they were spending to keep the rights to stuff like Friends and The Office. And now that they've been taken off the platform, I'm very happy to see that they're investing in themselves. At the beginning of the year, they were expected to spend $15 billion on creating content and only $4.4 billion on the content payments, which are the licensing agreements to other companies to use their products. And with the majority of the players taking their content away from Netflix, I think it's very smart to make your own content. And with 2020 being a super strange year, we've seen this very nice boost in the subscriber count as people are staying at home more because of the lockdowns. But they've also been saving a lot of money because a lot of the production has been stopped for some of the content that they're creating. And what that means is Netflix's free cash flow has looked really good for this year, which has been very unusual if you've been paying attention to the stock for a while. And so when I put up the numbers, the left three numbers are the 2020 numbers, and the other ones on the right are quarters before 2019 and earlier. So as you can see, the free cash flow has gone positive, but it's not expected to continue like that for the next couple quarters. So even the CEO has come out and said that this is not something that people should expect to be the norm for a while. They're expecting to continue to invest in themselves with content. And so the free cash flow looks good right now, but it's not expected to continue. So as I mentioned, the stock has sold off from its all-time highs back in July. And one of the main reasons from that is that the outlook going forward isn't as high as maybe some people expected based off of the 2020 numbers. I think this is an example of a company that's had an incredible year, and they've given realistic expectations going into 2021, and maybe the market didn't see that as a great thing. Anytime you lower expectations from the previous quarter, people are going to think of that as a negative because they think, oh, maybe their business is slacking. I just think they had an incredible 2020, and they're just being realistic on their price targets and their expectations for the upcoming year. And so right now, I think that Netflix is a great stock to buy for a long-term investment. I love the fact that it's off 10% from their all-time highs. I love that they're investing in themselves. Their free cash flow, which was positive for the past 3 quarters, not expected to continue, but I like it because it has been allowing them to save more money and is probably going to result in them spending more money in content. And they've shown how good they are at creating content, unlike something like a Disney Plus, which I think it's very interesting to see their subscriber numbers have ballooned in the past year, and they've already beat their 5-year expectations in 1 year. But from what I've been seeing, a majority of the people that are paying for Disney Plus are doing it just so they can watch Mandalorian, which highly recommend watching it if you haven't been doing that already. But Netflix just has so much quality content on the streaming service that you can pretty much watch it all day and you can always find something new to watch, which is not something you can say with what we've been seeing on Disney Plus. So I think competition is a major factor for the growth going forward, but I think Netflix has solidified them as being the leader in the sector. Unlike Salesforce, that I think they're going to be losing some market continually from stuff like Oracle, Adobe, and Microsoft. So let's hop on over the charts and I'll finish up the video talking about what I see there with Netflix.
All right, and then finally, we're going to wrap up the video talking about Netflix, ticker symbol NFLX. Netflix, as you could expect, has had a very solid 2020 with the lockdowns, people staying at home. But I'm really liking Netflix, similar to how I felt about AMD based off of how it's moving like this. In the past couple of months, it's been pretty horizontal. We get this push up to the top, it falls because of earnings, and it's been horizontal in this trend since this trend started back in June of this year. And so it's been a very solid area to trade between the $470 mark to the like $560. So that's a pretty good amount of profit to be just kind of bouncing around in this channel. I'm still very long-term bullish on the company. I think the charts look very bullish for a swing trade. And I think this is a stock that you could just kind of cycle through for a while. I am very bullish on it long-term, so I wouldn't be that opposed to just holding on to it instead of selling if it gets up to this resistance. But I think that Netflix, based off the charts, has so many opportunities. Even if the stock falls because of maybe it has weaker outlook than expected in the next earnings report, the lowest I could see it falling down to is like the $415 mark. And so whenever I'm looking at a potential long-term play, I want to see what the potential bottom is for if we have like one bad news story. And based off of the charts, I think that this drop would be very significant, going from 500 to 400. But I don't think this is the end of the world. I would happily double down on my investment if I bought in at the 470 mark and it fell down to 410. I would happily buy in and buy more. So I think Netflix is very bullish on pretty much every aspect of the company. It's at a discount considering it's tried to break above the highs from the summer like 3 times. And so it's great for a swing trading opportunity. It's great for a long-term investment. And I've been considering buying it for a long time. I will set an alert at this level because the swing trade just looks so good on this. And if it comes down to this level again, I will happily buy in.
So these are the 4 tech stocks you guys are looking to buy going into 2021. I am rushing because there's a leaf blower outside. Thanks for watching. I appreciate all the support, and I will see you tomorrow with another video.